This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Stocks take off. Wall Street rallies after a voting member of the Federal Reserve warned against moving too quickly on interest rate hikes.
Is there a fix? Why it may take something really big to keep insurers participating in the healthcare exchanges in many parts of the country.
And giving back, sports stars and celebrities line Cantor Fitzgerald's trading floor to raise money to honor the victims of the September 11th attacks. Those stories and more tonight on Nightly Business Report for Monday, September 12th.
Good evening, everyone, and welcome. A Fed-fueled rally, and September just got a lot more interesting. Stocks soared after a Fed governor warned against moving too quickly on interest rates. That alleviated some of the concern in the market that we saw on Friday, when stocks tumbled when another Fed official said an interest rate hike may be just around the corner. But today's speech by Lael Brainerd was the last appearance from a Federal Reserve official ahead of next week's meeting of policymakers. Her cautious language sent stocks sharply higher. The Dow Jones Industrial Average climbed 239 points to 18,325. The Nasdaq added 85, and the S&P 500 jumped 31. We begin with two reports tonight. Bob Pisani tells us why the markets are being whipsawed by the Fed. But first, Steve Leisman on what exactly central bank officials said and where the Fed's voting members stand.
Lots of Fed speak today, but the market taking its cue from Fed Governor Lael Brainerd, who made a full-throated case for the Fed not to hike rates. Brainerd, who as a governor has a permanent vote on the Open Market Committee, said the Fed has not been hitting its inflation targets and there are risks from abroad and a stronger dollar that the Fed should watch carefully.
To the extent that the effect on inflation of further gradual tightening in labor market conditions is likely to be moderate and gradual, the case to tighten policy preemptively is less compelling.
Her comments follow those by Minneapolis Fed President Neel Kashkari. He also made dovish remarks in an interview on CNBC this morning.
My view is there doesn't appear to be huge urgency to do anything, frankly, and let's get as much data as we can and let's try to get our inflation back up. Again, look around the world. Around the world, inflation generally is coming up low. This is a global phenomenon. It's not just a U.S. phenomenon, and that's why I think we need to understand what are those drivers? Why are interest rates over the last 30 years, why have they been falling?
Only Atlanta Fed President Dennis Lockhart sounded hawkish. He said, quote, "I'm satisfied at this point that conditions warrant serious discussion," end quote, of a rate hike. Here's one reporter's subjective view of where the 10 voters at the meeting stand on hiking rates based on their previous comments. 4 look likely to vote for a hike, and 3, including Fed Chair Janet Yellen, are possible supporters. 2 Fed governors, Brainerd and Dan Tarullo, seem unlikely hikers, and 1 Fed governor, Jay Powell, is unknown. But it's likely that all the Fed governors will side with the chair once she makes up her mind, as it's rare for governors to dissent, as opposed to Fed bank presidents who dissent more often. So it all now depends on Fed Chair Janet Yellen. She had said in August that the case was strengthening for a rate hike. There have been some lukewarm data since then, but we'll find out only next Wednesday if she's changed her mind. For Nightly Business Report, I'm Steve Leisman.
Pity the professional trader who has to come in every day and put money on the line. They are obsessed about what the Fed will be doing because interest rates are at such extreme lows given the improving economy. The traders believe there has to be some kind of big move in stocks and bonds in the dollar if and when the Fed moves again. But the last 2 trading days has not helped them understand the situation at all. Traders went from complacent on Friday morning to a mild panic midday Friday, from not caring to suddenly shorting the market. And then on Monday, the traders have reversed their positions. This is all in 2 trading days. How can you make money on this on a daily basis when one important Fed voter says they want to raise rates on Friday, and then on Monday, another important Fed voter says they likely will not raise rates? The short answer is you really can't. Maybe Fed officials should just shut up and stop confusing everyone. We now have 9 days before we're going to learn what the Fed is going to do, and most traders are no closer to having a firm conviction about what will happen than they did last week. Is the Fed data dependent or not? And what is the data telling us anyway? They're all so confused down here. Welcome to the new world of Fed communication. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
The head of the largest U.S. bank by assets wants the Federal Reserve to get on with it. Speaking at the Economic Club of Washington, J.P. Morgan Chase CEO Jamie Dimon said he wants to see Fed Chief Janet Yellen raise interest rates sooner rather than later.
My own personal view, and she does not call me for advice, by the way, but 25 basis points is a drop in the bucket. We say to you all, it's 25 basis points, go really slow. Don't worry about it. Let's just raise rates.
An interest rate hike means banks can charge a higher percentage to borrowers, and that, in turn, could help bank stocks.
Michael Hansen joins us now to talk more about the Fed, the economy, and the market. He is senior economist with Bank of America Global Research. Nice to have you here.
Thank you.
So, Michael, where do you come down on this? We have had a lot of cross currents. I'm trying to be polite in terms of what the differing Fed officials are saying. But what's the official stance from Bank of America Global?
Our expectation is we'll likely get a Fed hike in December. I think September is probably a little bit too soon for some Fed officials, as we heard, and it doesn't seem that even the ones that may be leaning that a rate hike might be okay, don't really see a cost to waiting. And so for that reason, I think it's probably likely the consensus, and I really do think that Chair Yellen wants to get consensus in the committee as much as she can, will likely be to not go in September, and they can wait until December.
You know, these days, we hear more and more from Fed governors, from Fed regional bank presidents, so we know what they're thinking. I can't say that I can remember a time when I've looked at the Fed and it seems as divided as it is today.
Well, I think we had a lot of division around QE1, QE2 in particular, right? So I do think that it kind of comes and goes in waves. Remember, the Fed is probably the most decentralized central bank on the planet. So they all get the ability to say their views. And I think the market was probably leaning a little bit in the direction of thinking that Brainerd today was going to be kind of a spokesman for the committee, and I think that's not right. I think they all give their own individual perspectives.
She's been a dove, and she was certainly a, quote, dove, meaning for longer interest rates.
No, that's right. I think she was trying to persuade her fellow committee members. She had 5 points that she wanted to lay out on why she thought it made sense to wait, and so I think that was really who her audience was.
What about Neil Kashkari's comments that we heard in Steve Leisman's report, which is that the low inflation rate that we have here is a global phenomenon and not specific to the United States? And how much should that influence, if at all, the Federal Reserve?
Well, I think it matters. I mean, the Fed is focused obviously on U.S. inflation, but it matters why U.S. inflation is low and whether it's going to come back up or not. And so there's a very large debate in the committee whether the tightening labor market in the U.S. alone will help bring inflation up. And Brainerd spoke about that today, and she's skeptical. Or whether it is global factors and other things that may continue to keep inflation lower for longer. I think that's really one of the central debates in the committee right now.
How much would higher interest rates help banks?
It's a good question. I mean, 25 basis points probably in the grand scheme of things is fairly modest. But, you know, the market right now is looking for some signs that rates will be going up as a favorable indicator towards bank stocks. I'd say the market rallied today despite that, right? Because I think by and large, I think most participants in the stock market are hoping that the Fed's going to continue to keep the punch bowl full for longer.
Yeah. Michael, thank you so much. Appreciate it very much. Michael Hansen with Bank of America Global Research.
Well, the bond market has been rattled by the big debate over interest rates. After defying predictions of a rise for years, bond yields around the world have started to climb from historic lows. But are the moves a head fake or something more? Mike Santoli takes a look.
Have we finally seen the bottom for interest rates? An abrupt sell-off in government bonds in the past week has lifted bond yields across world markets and raised this question. From Japan to Europe to the U.S., investors have stepped back from bonds as they question central banks' continued willingness to suppress borrowing costs near historic lows. This is a reversal of the sentiment that took hold over the summer, when trillions of dollars worth of bonds traded with negative yields, and investors bet that central banks in Japan and Europe would continue buying government debt indefinitely. Meantime, Federal Reserve officials continue to suggest a rate increase is likely before the year is out, if not after next week's policy meeting, then perhaps in December. Of course, many have incorrectly predicted that rates would start to climb for years now, and the rise in the 10-year Treasury yield from a low of 1.36% in early July to just above 1.65% now is hardly a dramatic move in the larger picture. That benchmark yield ended 2015 above 2.25%. This could prove to be yet another fleeting bounce in yields, and even if the ultimate bottom in rates has been seen, low global growth and inflation should keep them from rising too far or too fast. Still, a growing fatigue with central bank policies and softening demand for low-yielding bonds provides a jolt for investors who've been rushing into dividend-paying stocks, believing those low bond rates insulated them from severe losses. One bright spot of the recent lift in longer-term bond yields, it helps banks earn a better return on loans and has carried bank stocks higher. As for the broad stock market, higher rates can usually be absorbed if they come with improved economic growth and corporate earnings, as is the hope. But until such a growth pickup is confirmed, fatter bond yields could upset an equity market that's grown reliant on an assumption that rates would remain lower for longer. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.
Republican presidential candidate Donald Trump directed his criticism at the Federal Reserve. In an interview today on CNBC, he questioned the central bank's independence and said the Fed chief was keeping interest rates low to help President Obama.
She's keeping them artificially low to get Obama retired. Watch what's going to happen afterwards. It's a very serious problem. And I think it's very political. I think she's very political. And to a certain extent, I think she should be ashamed of herself.
John Harwood joins us now from Washington. Good to see you, John. So how do Mr. Trump's comments about the Fed compare to what he has said previously?
Well, it's odd, Sue. On the very same show just a few months ago, Donald Trump said that people he knew had a very high regard for her. She was a very capable person. She's just doing her job. She's a low interest rate person, just like I am. And today, when we're in the heat of the general election, he says she's very political and she should be ashamed of herself. He seems to be impulsive and react in the moment based on the stimuli he's getting at the time, as opposed to having a consistent judgment of her or anybody else for that matter.
Let's turn to Hillary Clinton following the disclosure of her pneumonia diagnosis and what seemed to be a sort of going weak in the knees at the very least on yesterday. How serious is her illness, and when do we expect her to resume a full schedule?
Well, it's not clear how serious the illness is. The images looked very serious yesterday. Her knees just didn't buckle. She collapsed. Now, her aides have not described just what kind of pneumonia she has, and potentially it could be treated successfully by the antibiotics. The bigger challenge immediately, Tyler, is that this undercuts the argument that she's been trying to make that she is in fact straightforward and not dishonest and not holding back information the way critics say. She and her aides encouraged that belief by not disclosing the pneumonia diagnosis, which they now say was made on Friday, not altering her schedule, and then going through, saying nothing, having her collapse, and then waiting until the end of the day to disclose that information.
Yeah, people have been talking a lot about that today. John, do you think that this will have a long-lasting effect on the race?
I doubt it, but you don't know. The race is relatively close. We've seen in the Washington Post ABC News poll over the weekend, she had a 5-point lead. That's down from 8 before among likely voters. It's substantial, but it's not an overwhelming advantage. And when you're a 68-year-old candidate, if you give people reason to doubt your physical fitness to take on the job, that's a problem.
Indeed. John, thank you very much. John Harwood in Washington.
The coming election is one reason why businesses are reluctant to increase investment or hire at a stronger pace. That's the finding of the Business Roundtable's quarterly survey of chief executives. Most leaders of America's largest companies think the economy will continue to grow slowly, and they don't think the election will increase economic momentum.
Still ahead, why Silicon Valley and all of those fast-growing startups may be at a turning point. Congressional leaders are working towards temporarily funding the government past the end of the current fiscal year and providing money to battle the Zika virus. Senate Majority Leader Mitch McConnell said a lot of progress has been made and that he expects to advance the legislation in the Senate next week. He did not, however, provide any other details.
Last week, we told you about a county in Arizona that has only one insurer offering a health plan on the Affordable Care Act exchanges. The lack of more than one option is not sitting well with some. And as Bertha Coombs reports from Florence, Arizona, many want to know if the problem can be fixed.
This summer, Pinal County was the epicenter of upheaval in the Affordable Care Act market. Until Blue Cross of Arizona stepped in, no insurers offered plans for 2017. Broker Teresa Farron is bracing clients for the fact they'll now have access to just one insurer.
I try to help my clients, and I feel like I'm a source that they can call to look at what's happening in the industry. And right now, I don't have a lot to offer them.
One big reason insurers nationally are cutting back on the ACA now is that funding for the government risk and reinsurance program that was meant to backstop big losses on high-cost claims expires in 2017. And that funding has been a fraction of what was expected, in part because of the political impasse over the law in Congress.
Paying more than 12 cents on the dollar in the risk corridors, that's just not right. If I promised you $100 and I handed you 12, you'd be a little disappointed.
To fix the problem, analysts and insurers say Congress needs to enact changes to make the ACA more like the Medicare market, which has a permanently funded reinsurance program. Enrollment rules need to be tightened to stop patients who only sign up for just a short time. And insurers say they need flexibility to charge older, sicker patients a bit more and offer younger, healthier ones lower-cost, leaner plans. Analysts say that's just a start.
I think, widening the age bands and allowing insurers to offer skinnier coverage could get some more people signed up, but I think those fixes alone probably are not enough.
Those measures will require legislative change in Washington, but ultimately, the ACA markets will only stabilize if enrollment grows. And that requires insurers to adapt, says consultant Jim Hammond.
If we want everybody to get in, and we want the younger and healthier people to get into an insurance product, we have to give them a reason to do that.
Analysts say if Washington doesn't come up with a real fix by this time next year, we could see more communities like Pinal County, Arizona, facing the prospect of no ACA coverage in 2018. Bertha Coombs, Nightly Business Report, Florence, Arizona.
Potash and Agrium merged to become an agricultural giant, and that's where we begin tonight's market focus. We recently told you that Canada-based fertilizer makers were in talks regarding a potential tie-up, and now they have. The companies will merge to create a company with a total value worth $36 billion. Shares of Agrium down 2% to $92.64. Potash shares fell 1% to $16.76. Hedge fund Starboard Value disclosed a more than 4% stake in Perrigo and called for change at the drug maker. Over the weekend, the activist investor sent Perrigo a letter saying the company's financial results have been poor since it fought off a hostile bid from Mylan last year. Perrigo has responded, saying it will enter into constructive and productive talks with Starboard. The shares popped 7% to $95.23. Horizon Pharma said that it would expand its business through an $800 million acquisition of Raptar Pharmaceuticals. The deal allows the biotech company to strengthen its portfolio for rare disease treatments and increase its focus in that market. Horizon Pharma shares rose 9% to $18.89, and Raptar shares soared 20% to $8.98.
Tesla will launch upgrades to its autopilot feature within the next couple of weeks that will include the use of advanced radar and will rely less on conventional cameras. The move comes after a fatal crash in May while the vehicle's semi-autonomous system was on. The new features are aimed at improving driver safety, something the CEO Elon Musk is betting on.
The 8 set of improvements, radar inclusive of the others, probably cuts the accident rate in more than in half, but that's my guess. I mean, I think it would make the Model S by far, the Model S and the X, by far the safest car on the road.
Tesla shares up nearly 2% on the day to 198.30. The French drug maker Sanofi will launch a joint venture with a division of Google's parent Alphabet to take on diabetes. The companies will inject $500 million into the new company called Onduo, which is expected to focus on treatment for the disease. Shares of Alphabet up 1%, 798.82. Shares of Sanofi up 63 cents to 39.82. HP is buying Samsung's printer business for $1 billion. The computer maker said the deal is aimed at reinventing and disrupting the copier industry. After the transaction is finalized, Samsung will invest as much as $300 million in HP. HP shares were up nearly 4% to $14.49. And Taro Pharmaceuticals disclosed in a filing late Friday that the drug maker and two of its executives received a subpoena from the Department of Justice. Officials are seeking documents regarding employee records, generic drug pricing, and sales. Taro said it will cooperate with the investigation. Meantime, the news sent shares down nearly 4% to $119.42.
Silicon Valley may be at a turning point. The number of deals are falling, and the majority of venture capital is not going to the newest players. What happens next was a big topic of conversation at the TechCrunch Disrupt conference. Julia Borston has more tonight from San Francisco.
This year's TechCrunch Disrupt brings together 500 startups competing for investors' attention at a time when it's increasingly tough for the little guys here to take their business to the next level. Venture deal volume declined in the second quarter, and though overall venture capital investment rose slightly, the majority went to private giants such as Uber and Snapchat rather than newer players, raising the bar for startups.
You need to have a business model that makes sense, and in my opinion, that's good. It's sort of survival of the fittest now, right? You call out the ridiculous companies that probably shouldn't have existed in the first place, and now we are all thinking from the beginning, what is our business model? How do we go and make money?
Startups here, including Air Mule, a company that allows travelers to rent out their luggage space, says it's getting harder to secure funding.
We're finding that it's taking more meetings than it probably would have a few years ago to close this round.
Another factor all the folks here have been watching, this has been a slow year for IPOs. Through August 1st, it's been the slowest year since 2009. Jerry Huang, COO of Shanghai-based iTutor Group, which has a valuation greater than $1 billion, says his company sees the advantages of staying private longer.
There's an opportunity for a lot of these organizations to grow at a significantly fast pace by staying with private funding. So companies like Uber, even companies like ourselves, what we can do is really invest heavily on cutting-edge technology, solutions that really drive results.
But industry watchers say this IPO drought can't continue as investors are looking to cash out.
I think there's a lot of pressure to not go public right now, which is why you see these gigantic companies not going public. But I think that temperature is slowly changing, where the investors start saying, when do I get my money back, right? When is my return on my investment?
The mostly early stage companies here are far from an IPO, but eager to get on the radar of investors who come here to discover what could be the next generation of unicorns, or companies worth more than $1 billion. For Nightly Business Report, I'm Julia Borston in San Francisco.
Coming up, Wall Street remembers and gives back to commemorate the anniversary of the September 11th attacks.
One day after the 15th anniversary of the September 11th attacks, Cantor Fitzgerald is continuing its tradition of giving back. That firm, which lost more than 650 employees on that day, is hosting its annual Charity Day, and Dominic Chu was there.
Sometimes I tell them when certain people laugh that TMC means that Taro makes cash. Yeah.
Brokerage and banking firm Cantor Fitzgerald lost the majority of its New York-based employees in the 9/11 attacks, and now uses the anniversary to raise money for charity.
Thanks very much. Steal my trade.
15 years ago, we lost 658 people. And so when we rebuilt the company, we said we would have a charity day. We ask all our employees to waive their day's pay and ask all our clients to do as much business as they can. And we don't give away our profits. We give away every dollar of revenue. Last year, we raised $12 million in that day, $125 million so far.
$7 million. $7 million. All right, done. Yeah.
Every dollar collected in commission revenue for the day goes to charity. And a host of celebrities in the worlds of sports, arts, and entertainment turn out to help the cause.
I'm great, just trading away, making lots of moolah.
From football players like Eli and Peyton Manning and Brandon Marshall to baseball players like Dylan Betances, to supermodels like Lily Aldridge, to actors like Steve Buscemi and others.
It's not just about professional athletes. It's about every human being on this planet. It's as you climb the ladder, can you lift someone else up with you?
All day, seasoned traders sat alongside celebrities trying to get deals done for stocks and bonds.
101. 101. It's about 88 cents. About 88 cents. Done? And nobody told me to say that.
The Cantor Fitzgerald Relief Fund was originally set up to help some of the families directly affected by 9/11. But today, it helps a variety of other charities.
If you give today, it goes a long way. And remember, Friends of Firefighters, they're doing their benefit gala on October 20th.
For some, it's a little bit of fun stepping outside their normal professional lives.
They've turned, what happened to them at 9/11 into a day of positivity and raising money for charities, which is such a beautiful thing to do to celebrate, the lives. It's always fun, and it's fun to pretend that I'm a stockbroker for the day and trading.
This is hard, man. There's a lot of work you have to do here. I mean, I feel more nervous doing this than when I'm pitching.
It ends up being a great day for a great set of causes.
Oh, done. Thank you so much. I'm on fire.
For Nightly Business Report, I'm Dominic Chu from the Cantor Fitzgerald trading floor in New York City.
I wonder if Peyton out-traded Eli today. We'll see. All right, before we go, let's take another look at the rally on Wall Street. Eli had a good day yesterday. The Dow climbed 239 points to 18,325. NASDAQ up 85, and the S&P 500 jumped 31. Forget Friday? Forget Friday.
That's right. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
Have a great evening, everybody. I'm Tyler Mathisen. Thanks for watching.